Good afternoon to all of you, and welcome to this session where we are going to present our half-year results. I'm here with Septima Maguire, our CFO, and we are going to give you insight in what we have been achieving on the financial side, but also our operational performance in the first half of the year, but also in the second quarter. And we will also cover the outlooks for the remainder of the year. And this time, we also are going to use the opportunity at the half-year waypoint of the year to refresh you on the unique strategic positioning of the group, as well as share our thoughts and targets on the medium term, the next 3 to 5 years. But let me start with some highlights. As alluded to, we are happy to announce another time, once again, strong financials, reflecting a strong and continued progress in the group. The numbers speaks really for themselves. Revenues year on year for the first half has grown by 33%, reflecting good growth and progress in all business areas. And even better, the adjusted EBITDA has grown even more, and in nominal figures, more than doubled year on year compared to the first half of financial year 21. I'm also tempted to mention that we in the first half of this financial year have delivered more on EBITDA than we did for the full year in financial year 2020 when we came into the group. Our EBITDA margin is now at 20%, which reflects that we have been able to grow the business, not only on the top line, but more so been able to drive an even stronger development in margin and earnings. And this has been the stated objective and focus since we came into the group, and I think we have delivered on that. We are very well aware that we are still not a profitable company if you look at the bottom line, but I can assure everybody that we are working hard to get there. The increased earnings in the first half of this year is reflected in us being able to narrow the operating loss to £2.2 million as opposed to a loss of £4.6 million for the same period last year. Key is, of course, cash flow, where we also seen a very positive development in the first half of this financial year with a positive 2 million compared to a negative 1.5 million if you look at the first half of last year. All in all, the numbers reflect a continuation of good financial, operational, and strategic progress in Benchmark. If you look at the LTM figures on top line and EBITDA, they have consistently moved upwards quarter by quarter, evidencing the effects of the restructuring, as well as the commercial focus we have embedded in the group that is now driving returns. That is what you've seen so far. This is what we are working hard on every day to make sure that you will continue to see in the quarters to come. The potential in this group is way bigger than reflected today, and we are walking the walk to take us there. On the highlights, it's natural to give a short update on the Oslo listing. We announced in November last year that the group has entered into a process considering a listing in Oslo, and that DNB Markets and Pareto Securities was engaged as joint global coordinators. The process has since then been advancing, and subject to market conditions, we are targeting a listing at Euronext Growth in the second half of the calendar year with the intention to uplist to Oslo Børs within 12 months. Such a listing will place Benchmark in the aquaculture ecosystem surrounding Oslo Børs, which we believe will be beneficial for the company, the owners, and the stakeholders of the group. Before moving more into the highlights of each system, I think it could be useful, especially for new listeners, to repeat what Benchmark is all about and why we are such a unique company. We define ourselves as being a market-leading aquaculture biotechnology company, and this is not without reason. Aquaculture, because this is the only industry that we are focusing on, and we are lucky to be in that industry. It's a growing industry driven by global megatrends that will give structural growth for those who are well invested. And Benchmark is very well positioned. Biotechnology, because we are a unique, well-invested biotech platform, probably the most unique in the aquaculture space, with 3 clearly defined but complementary business areas: genetics, nutrition, and health. Business areas where we hold leading market positions, business areas that commands the characteristics of being biotech, highly specialized, science-driven, and with large entry barriers. From the 3 business areas, we are providing specialized, high-margin, mission-critical solutions that enhance farming efficiency, animal growth, fish health, and fish welfare, thus driving sustainability to our customers in the aquaculture world. We provide these solutions through our very well-developed and well-invested infrastructure, reaching customers in more than 70 countries. We have our own well-invested infrastructure in more than 26 countries, and we are truly a global company covering all relevant part of the aquaculture world. Those of you who have been following us more closely know that we have spent the last 2 years establishing firm commercial foundation, preparing the group to take out its potential. From the numbers, you see that we are a growth company and we have grown, but and that should be underscored. Quality of earnings, returns, and cash generation is and will be very much our main focus. Having this as an intro and moving more into the granularity of the business areas, starting with genetics, where we see that growth on invested infrastructure is starting to come through. In the first half of the year, we have seen significant uplift in revenues and adjusted EBITDA compared to last year. This is driven by increased egg sales compared to last year, as well as income from slaughtered fish. Looking from where we are right now, and with the order book that we have for the remainder of the financial year, we expect to have a strong year for salmon genetics out of Norway and Iceland. This remains the commercial backbone of this business area. As for when it comes to other areas, being Chile, SPR shrimp, and tilapia, we are still in a more initial commercial stage. Having said that, we see progress in the other areas. In SPR shrimp, we have had good progress in sales to key markets in Asia, and sales have been exceeding our expectation in the first half of the year. This is painting a picture of the opportunity that lies ahead of us in this area. We are still in the early stages, but we are positioned to take out larger potentials in the years to come. A prerequisite to take out future growth is to have an infrastructure in place that supports growth. This has been a key focus for us over the last 2 years, making sure that we have an infrastructure that makes it possible for us to take out the structural growth we know will come in the aquaculture industry for those who are well positioned, and we are. We are therefore happy to state that we have completed key infrastructure investments in the business area. In this business area, it being the new incubation house in Iceland that already provided us a lift in quality and capacity, and you can see the center in the picture. The production site in Felsmere for SPR shrimp, or the production facilities in Homestead, Florida for our fingerling tilapia production. Focus now and onward will be to take out the potential and in the capacities of these infrastructure investments. It should also be mentioned on the highlights from genetics that we are advancing our genetics services with several new clients wins during the first half. I should remind everybody that besides having our nucleus in salmon, shrimp, and tilapia, we are running genetics programs as a service to more than 10 species globally. This is a small but profitable business for us that completes the genetics house that we are building in Benchmark Genetics. Finally, a couple of words on Chile, where we are still in the build-up phase after having established in the market. As we have stated before, we have done the groundwork for an expansion into this market. And in the first part of the year, we also obtained our organic certification, which enables us to have a unique position for this segment in this important market for us. Moving over to nutrition, where we have had a stellar first half of the year. with strong growth in revenues, but even stronger growth in earnings. Our EBITDA from this business area is 84%, is up 84% compared to first half of last year. Behind this strong financial development sits growth in sales in all product groups and markets. From the numbers, we see that we have been able to gain market share, even if we have experienced improved market conditions in the period. Market has not developed at the speed of growth that we are showing. We also had some significant new customer wins, strengthening our basis in the marketplace, and we will of course continue to, our aim is of course to continue to do what we've done so far in order to strengthen the position further. Key to our performance in advanced nutrition has also been good cost discipline, as well as improved capacity utilization and optimization of operation. This is actually something that we are constantly working on, and that we see good results of during this period. And we've seen good results of it this period, despite the fact that we've gone through months where logistics and running efficient production and efficient supply chain has not been very easy. But having the discipline in place, having these optimization processes in place is, as I see it, a really big asset for us in the times that we are moving in now with increased inflation. It should also be mentioned under the highlights from this business area that we continue to develop our products and technologies. And finally, we should mention that we have invested in solar panels in our Thailand production facility. This is a part of a tangible net zero roadmap. We are not only talking about net zero, we have a tangible roadmap, and this is part of that. And it's also, of course, part of our efforts to reduce energy consumption and cost. Then moving to the health business area. First half of the year has been the first months of operations of Ectosan Vet and CleanTreat, the solution that was launched last August. And since last time we gave an update, we have been progressing. First of all, very important is that the fundamentals are continue to be confirmed as being right. Efficacy of the solution is, as we have expected, being very, very high. Gentleness to the fish in the treatments reflected in very low mortalities, as well as fish getting instantly back into feeding, is also confirmed, as we had expected. Operations of the CleanTreat system has also been satisfactory, despite periods in both Q2 and Q1 in this financial year with harsh weather conditions. And we have also been able to increase efficiency in offloading from the wellboats that are doing the treatment to the CleanTreat system. We are also happy to see that the number of clients that are using the solution is picking up, it's increasing. But still, it's fair to say that we are at a stage where we still have to work hard on getting customer adoption and having the solution embedded in the sea lice treatment strategy of the farmers. The farmers are heavily invested in other treatment technologies and methodologies, and more farmers need to get comfortable using the solution as an alternative to what they've been doing so far. And as I've stated consistently since the launch last August, to get this customer uptake will take time, despite tireless effort from our side. Key to gain customer adoption is also to make sure that the solution is so applicable and cost efficient as possible. The variation to the label that we announced in the beginning of this month, allowing for one reuse of the treatment water, was an important step in the right direction. But it's important to say that that is not the end station we are aiming for. We are also progressing our work to get a multiple reuse variation, which eventually is needed to get to the desired efficiency. We are still working on our timeline here, where this could come into play in Q1, Q2 next calendar year. As mentioned when I did the Q1 presentation, we are also working actively on integrating the CleanTreat system, which is the water purification part of the solution, into existing infrastructure of the farmers as well. This is now a key priority for us, since the current setup using platform supply vessels as the platform for the CleanTreat system is costly, but for us and the farmers, and integrating this CleanTreat system into the existing infrastructure of the farmers is therefore the direction to travel, to take down the cost hurdle for the farmers and to increase the feasibility of the solution. At the same time, such an integration into existing infrastructure of our clients poses an opportunity also for us to reduce capex, but of course keeping the business proposition and the returns on our side. Finally, on Ectosan and CleanTreat, we have started to look at new territories. We are running a trial in Scotland using CleanTreat on Sandnessjøen. This is a first step, proving the technology in this territory. That's a first step preparing to enter into this market. We have also applied for a marketing authorization in the Faroe Islands to be able to introduce Ectosan into this market. So with these highlights, I'll leave it up to Septima to go through the financials in more granularity. So Septima, over to you.
Thank you, Trond. I thought it would be useful, using the half year as a backdrop, to pause for a minute to reflect on where Benchmark are in terms of the journey towards profitability and cash generation. When I joined Benchmark over 2.5 years ago, I came in with a clear mandate to restructure the business, sell or close the non-core and loss-making parts of the business, and streamline it to ensure that we could focus on our core mature aquaculture businesses, such as genetics and nutrition, and also move the potential growth areas, such as Ectosan Vet and SPR Shrimp, into the commercial phase. So having done that, it leaves us in a strong position for the future, with strong revenue and adjusted EBITDA growth, coupled with cost and cash control to drive future cash generation. Along with disciplined investment and solid working capital management, this gives us very good control to manage the business into the future. Next slide. So there's been a continuation of good results in the first half of the year. The momentum, which was established in financial year 21, continued through the first and second quarters at both the revenue and adjusted EBITDA level, with growth of 33% at revenue and adjusted EBITDA more than doubling to 15.9 million versus the first half of last year. From a quality of earnings perspective, adjusted EBITDA excluding non-cash fair value uplift increased by 149% to 14.8 million pounds. Net debt excluding our leased assets of 50.6 million versus 56.9 million was aided by the equity issuance of 20 million in Q1 2022. And we'll look at the cash flow movements in more details later in the presentation. So moving to look at genetics. As we've previously stated on the next slide, the core business of salmon genetics, where we have mature and invested businesses with production facilities in Norway and Iceland, are the main drivers of sales growth and also profitability within this business area at this point. And these have delivered 6.7 million of adjusted EBITDA. Of this, 1 million was invested between tilapia, shrimp, and salmon Chile, as we continue to ramp up and commercialize these growth areas, leaving 5.7 million of adjusted EBITDA for the business area for the half year. Excluding fair value uplift, we'd increased EBITDA by 18% for the half year, and with good visibility on egg deliveries for the second half of the year, we expect to deliver solid results for the full year. With respect to the SPR shrimp, we've ceased capitalising costs as we've now moved from being in development phase fully into commercialisation. The growth capex that you can see invested this year has been to close out projects commenced in financial year 21, mainly the incubation centre in Iceland, which is already showing great results in terms of quality and consistency of eggs. And so this leaves us well situated for the future, with a well-invested asset base in both our mature business and our growth areas as we move forwards. Moving to the next slide to look at advanced nutrition. Now, this is the most mature and cash generative part of our business, but it still has delivered excellent growth through financial year 21 as it recovered from the impact of COVID, and also, more importantly, increased its focus on commercialization. And then into the first half of this year, when it delivered revenue growth of 20% at constant exchange rate and adjusted EBITDA growth of 84%. With revenue growth in each of the product areas, Artemia, diets and health, and also within each of our geographical regions, we continue the trend of strong trading. And this, along with good cost control, drove adjusted EBITDA margins to 27% in the period. Moving to the next slide, where we can look at health. Now, health continues to ramp up the Ectosan Clean Treat product, delivering revenues of 8.6 million, of which 2.2 million relate to recharges for vessels and fuel. During January, given severe weather difficulties, neither vessel was able to treat, which will have impacted the Q2 results on a standalone basis. Now, the balance of revenue of £2.1 million related to the sale of the Salmosan sea lice treatment. The ramp up of Ectosan Clean Treat, along with good margins on Salmosan, drove growth in gross profit to £4.5 million versus £0.6 million last year. And whilst we experienced growth in our operating cost base, overall, our adjusted EBITDA loss in this business area shrank from 2.6 million last year to a positive adjusted EBITDA of 0.1 million in the first half of this year. The ramp up in Ectosan and Clean Treat will have driven an increased investment in working capital in the period to reflect higher sales levels and also inventory to satisfy demand for Ectosan, which we're going to look at in the next slide. So from a cash flow perspective, with stronger trading results, with better cash generated from operations of 18.4 million, 13.5 of this was utilised in building up working capital, either driven by increased sales in our business or increased inventory as we're in the launch phase of Ectosan. As I noted earlier, we benefited from the equity raise during the first half of 2022. But most notable is capital expenditure of 6.6 million reflects much lower growth capex versus last year, as we're closing out growth projects and focusing more on increasing utilisation of the assets in our mature business, and also to start obtaining value from the assets invested within our growth initiatives. With net debt excluding leases of 50.6 million and available liquidity of 57.7, we're well positioned to move forward to profitability and cash generation. Back to you, Trond.
Thank you, Septima. And moving over to the outlooks from where we are today. After a strong start of the year, we are trading in line with market expectations. Focus for us in the period to come is, of course, to continue with our rollout of Ectosan Vet and Clean Treat in the market. We are in a very important period where key is getting the solution more embedded into the sea lice treatment strategy of our customers. And as I also mentioned initially, a key in what we are doing, working actively on now, is also to integrate the Clean Treat technology into the existing infrastructure of our customers. This will eventually make the solution more adaptable for the customers, which is a key to secure widespread use. In genetics, we have a strong order book, thus a strong outlook for egg sales for the remainder of the year. In nutrition, we've had a strong start of the year. We got a solid demand profile in this business area for the second half of the year also, but it's phased slightly more towards Q4 due to timing of expected orders. Given that we are, as addressed in initial highlights, we are, as I said, then targeting a listing at Euronext Growth in the second half of the calendar year with the intention to uplist to Oslo Børs within 12 months. And as I said, such a listing will place Benchmark in the aquaculture ecosystem surrounding Oslo Børs, which we believe will be beneficial for the company, the owners, and the stakeholders of the group. Given that we are at the half-year waypoint, I would like to use the opportunity to restate, next slide please, restate the fundamentals around Benchmark and why we are such a unique position from an investment point of view. We'd also like to give you some more insight into the medium-term targets we have, which we believe you will find useful in understanding the direction of travel. Having been in this aquaculture industry for 30 years and in Benchmark for 2 years, I'm more convinced than ever that Benchmark is a unique company, a unique value proposition, and a unique investment opportunity. So let me spend some moments just to tell you why I think so. First of all, we are lucky to be in the aquaculture industry, an industry that still is young, will play a crucial role in global food supply in the future. Consequently, will have a strong growth driven by global megatrends like demographics, sustainability, and health. So the industry itself will provide strong structural growth for those companies who are well positioned. And this is exactly what Benchmark is. In this industry, we provide specialized, high-margin, mission-critical solutions to enhance the farming efficiency, animal growth, fish health, and fish welfare, the crucial factors within any biological production. And in this industry, we hold market-leading positions in what we do. We are a market leader within salmon genetics, we are a market leader within specialized nutrition, and we are a market leader within medical treatments for sea lice. So in sum, what we represent is truly a unique biotech platform, in my mind, the most unique one in this industry. But bear in mind, and this is important, we are a well-invested one, which differentiates us from early-stage biotechs. We have 2 well-established business areas, genetics and nutrition, and a third one that is well underway to become the same. Good news is also that we as a company is at a point where we have well-established strategies and a financial framework for growth and returns. We are long past the initial development stage. We have executed the needed restructuring, established firm commercial foundation and financial discipline, and we are now at the stage of consistent delivery on a financial framework that will generate cash and returns. And finally, we are more than just an ordinary company. We are purpose-driven with a high-quality organization with strong ESG credentials. Sustainability is at the core of everything we do. It has always been that, and it will always be that. So, with this, moving on to how you should think of us going forward. And based on everything I've said so far, it should be obvious that Benchmark is in a unique position moving forward. We are in the aquaculture industry that will provide structural growth, and we are definitely in a position where we can utilize this opportunity. And I will now leave it up to Septima to take us through how our unique positioning and value proposition, our firm foundations and strategies will translate into financials and how we expect to develop over the next 3 to 5 years. So Septima, the floor is yours.
Thank you. So we're at the point where, based on our current growth and previous investments, we have the tools to continue to grow the business, getting better asset utilization from the assets within the mature business areas of nutrition and core genetics, and get value from and obtain the potential of the assets in our health business, creating margin accretion and consequently better cash conversion. Moving to the next slide, please. So, what does that mean? Reflecting on what I said earlier about where we are at present and how we're aiming to move ourselves forward, we've delivered good revenue and adjusted EBITDA growth in the first half of this year. And our objective is for this to continue in the medium term. The next step of the evolution of Benchmark is to move the cash conversion percentage from the 30% of last year upwards to translate this growth into cash returns. And with the capex burden moderating, use that cash in the medium term to deleverage the business and ultimately to drive free cash flow. With higher sales levels from both the mature business and the growth coming through from the newly commercialized growth vectors in the medium term, this will allow us to get better asset utilization of our invested assets. We can then drive return on capital employed and thus driving more crystallization of the existing embedded value in the business. So moving to the next slide, where we look at how does this translate into the business areas. As we've previously guided around the more mature parts of our business, we expect strong growth to come from our genetics business, built around the growth in our core salmon egg business, and then the commercialization of the growth areas in Chile salmon, SBR shrimp and tilapia. And as you can see, our medium-term objectives are for revenue growth of 10 to 15%. This growth in revenue will continue to drive margin accretion within this business area in the future. We anticipate that advanced nutrition will continue to grow ahead of the market at 7 to 10%. This business area will continue to drive strong margins with adjusted EBITDA margin objectives of 20 to 25%. And for health, the recent variation allowing us one reuse of water is a step in the right direction. And we're working towards the multiple reuse variation, which will allow for better efficiency in the solution and has potential upside from a margin perspective to move it towards the target 60% margin when fully commercialized, which will be when we have the expanded marketing authorization with multiple reuse and with Ectosan being used as a primary tool in the industry against sea lice. And of course, geographical expansion to allow us to reach the 75 million global potential. One point of note is why did we not use a growth percentage for the health business area? And to clarify, it's because this is a newly launched product and therefore it's going from zero up in its ramp up phase. So the percentages would not have brought value to you as investors. So our focus is profitability and cash generation. And we believe that each business area is well placed to contribute towards the generation of both as we move forward. And on that note, back to you, Trond, for some closing remarks.
Thank you, Septima. And to summarize this presentation, we have had a strong start of the year, which is reflected in strong financials. We have continued the consistent progress that you have seen from us over many quarters now. We are well positioned to continue this journey in the years to come, and we have realistic targets giving us a clear direction of travel over the next 3 to 5 years. So with these closing remarks, we end the presentation and we are open for Q&A. So thank you.
Thank you to you both, and we've got some questions that have already been submitted. There are two here actually which relate to the listing and the move or the additional listing in the Oslo market. Question is, in future will you delist in London? And secondly, as an addition to that, can you give your thoughts on the impact to small private shareholders of your move to Oslo?
Septima, are you starting out that?
I'll give the answer and then Trond, if you feel any need, you can add. In the context of a delist, there has been no decision made around a delist. The only decision that has been made with concrete authority has been the decision to do the initial listing on the Euronext Growth Exchange in Oslo. And to reiterate what Trond, the rationale Trond gave was that we see this as the ability to access a broader range of investors, but was not forgetting that the majority of our shareholding is still held in UK hands. And so we would not want the UK investors to be disadvantaged. So from a practical point of view, it will be business as usual. From a trading point of view, we would hope that by having additional investors and additional demand that hopefully we can all benefit as an organisation by having an additional listing in place.
Thank you. Some questions here around Ectosan and CleanTreat. What is your expectation of the eventual return on capital for the investment in Ectosan?
So in terms of the return on investment, so if you look at it from a practical point of view, we've spent over 10 years and a notable amount of money investing in it as a solution. So I think at the moment we have approximately, for the development of the Ectosan solution, we've got approximately £10 million on our balance sheet for that. But as we move it towards a target margin of 60%, and we had always noted that we have the potential revenue of £10 million per unit, or a total global potential of £75 million. We believe that there's a sufficiently robust return on investment profile for the investors and for the company to not only make back the previously invested capital over the last 10 years, but also then to make it a good earnings accretive investment for the future as well. And as you can see, when we gave the guidance, when we look at a return on capital employed, we're moving from a return on capital employed to 5% to 15 plus. So we will need investments that actually to be creating investments and returns that exceed that, to move the whole business as a whole from that 5% existing up to that target return on capital employed. And that's what we're trying to move the business towards.
Very helpful. Again, on Ectosan CleanTreat, are the two CleanTreat boats both currently sold out or fully utilised at this point? And when do you expect the third boat to come on stream?
Both boats are in operation. They are not sold out, and that's why we're trying to be very transparent and saying that we are in a period where it's extremely important for us, or it's very important for us to make sure that we get up the customer utilization of those assets, and that we get the customer adoption up. Working constantly on that in order to get up to the utilization that we are aiming for. But we are in a situation where we still have to work with farmers to do the customer uptake. The number of customers are increasing, but they are heavily invested into other technologies and methodologies for sea lice. So it takes time to convince them, and since we also don't have the optimal marketing authorization with the multiple reuse, that makes it a little bit harder. But we are working on all these parameters in order to bring us to that to the point we want to be. But as I said in my presentation, which I also said consistently since we did the launch, it will take time, even if the solutions and the fundamentals around the solution is as we expected, and it's confirmed through what we've seen now. It will take time to turn the farmers into our solution as a primary solution, and to embed it into the sea lice treatment strategy of the farmers.
And what about the third one coming on stream?
We have no definitive timeline that we would like to share right now, but we are working on that also. And as I said, a key of what we are doing right now, and just to be transparent on that and repeat that, is we see that we probably would like to embed the CleanTreat technology more into the infrastructure of the farmers. So what we're looking at is to combine those things going forward, and of course we will update when things are moving on that side.
Okay, thank you. I think you've rather answered this next question in terms of the cautiousness of adoption, but to be explicit, have any of the major salmon farming groups moved over in entirety to CleanTreat? And if they haven't yet, is it a reasonable expectation that in due course they might?
No, all the major players in the Norwegian market have been and are using the solution. Is it the primary tool? No, it's still not the primary tool for them. And that's why I'm alluding to or pointing to that we need to work on the market in order to bring it from a solution that is in an introductory phase where they're learning to use it to become more a primary tool in the industry.
And in terms of when it becomes a primary tool, do you foresee the possibility that it might become the only tool, or do you think the nature of salmon farmers is that
we never thought it will be the only tool. It will be a combination of tools. Some of them are preventive. They're probably going to continue to use some of the mechanical treatments even if they have some bad consequences on mortalities and loss of feeding days and things like that, but they're also getting better, but so they probably continue to use that, but we would like to move the solution that we have in our hand to become more of a primary tool than it is today.
Okay, thank you. Apart from the restrictions that you are working to alleviate around multiple reuse, are there any other remaining restrictions on the Norwegian license that you would hope to see change in the future?
We will continue to build out MA as we see feasible going forward. But the main thing that we're working on now is to make sure that we get the multiple reuse, which is a key to increased efficiency, which is again a key to bring the solution to a point where it becomes a more central tool for the industry than it is today.
Thank you. Moving on from Clean Treat then, is a financing being considered in connection with the proposed Oslo listing, be it to refinance the NOK bond or for other purposes?
That's a Septima question, isn't
it? Everybody is aware that we need to have the NOK bond refinanced by June of next year, and it is one of our central priorities to make sure that we maintain the financial stability of the group. It's not a great time to do any sort of large fundraising, quite honestly, with the current markets as they are trading. But in terms of our bond is trading well on the Oslo exchange. And we get good feedback from bondholders. So it does give us a degree of confidence, albeit it's not certain around refinancing. And in terms of would there be a potential equity raise when we would look to move to an Oslo listing potentially, but no decision has been made at this point in time. Our focus is really on allowing us access to that larger pool of aquaculture investors.
Thank you. Looking to some factors slightly beyond your control, but can you describe or quantify the effects of the Russian-Ukraine war on perhaps your disruption to end markets, etc.?
I think we stated this around the Q1 presentation also when it was more on the news side, and I think we are quite on the lucky side when it comes to the effects of that. We have been sourcing CIS Septima from Russia historically. We are not doing that anymore now. That's paused, and we expect that that's going to be a situation that will hold. For us, it might be an upside because we have the sourcing from the US with GSL Artemia, so we are fully sourced. So even if it might be a little bit jump down on the sales of CIS Artemia, that has been part of the product portfolio that we've had, short term, medium and long term, we don't see the big effect of that, and we are sticking to the rules and our moral obligation. We are not sourcing from Russia, and that's our clear policy on that. And I think we will be fine not doing that going forward.
Thank you. And then the other big macro headwind, obviously high inflation. Can you talk about the impact of that on the business, where you might be exposed to utilities, fuel, logistics?
Yeah, it's a concern. It's of course a concern for us, like for any other business throughout the world these days, But to be honest, and I pointed to that also in my go-through of advanced nutrition, where we probably have the potential to be most impacted, to be honest. It's not new for us that costs are going rapidly up and that logistics are difficult, in the wake of COVID and things like that. We've gone through that for more than 1 year already. And what you see from our numbers is that we have, through cost discipline, through better capacity utilization, and to optimization of our production, we've been able actually to take down our unit costs so far. So we have that kind of we have that already embedded in what we are doing, and we have been doing fine so far. Will we be impacted going forward? Yes, a little bit, but we are also will of course adjust prices. We will also adjust prices in the market, and we are already doing that in order to reflect increases in costs. So the combination between operational efficiency, which we are kind of good at, and we have shown that over more than a year, that we have really good at that, and that we adjust the prices, I think we will manage through the situation. But I can promise you, it's really one of the things that we are watching very closely and that we are on top of every day.
Just a final point on that, from an energy point of view, we are actually, given our geographical dispersity, able to avail of different sources of energy rather than the sort of traditional. Given the fact that in Norway there's quite a lot of hydro, we've got thermal energy coming from Iceland, and so it doesn't make us reliant on one single source of energy. And so from a pricing point of view, we are not quite as exposed as you would be. But from a labour inflation point of view, we are very conscious of the fact that we have to look at that and be very considered in our approach to that, both in terms of price increases, but also in ensuring that we appropriately support our people in these difficult times.
Yeah.
A final question then, and a last shout out to anyone else who would like to submit one. But the final one that we currently have are, how are these inflationary effects then built into the long-term financial guidance that specifically you, Septima, outlined just then in the presentation?
Yes, in terms of the guidance that we've provided, they have been considered. As things evolve and as these markets progress, we will continue to consider and update as appropriate. But we feel that they're prudent guidance based on our objectives as to what we want to achieve for us and the business.
Lovely. Well, thank you to you both. And I think another 3 months and we will speak with you again.
Very good. Thank you, Anna.
Thank you, Anna.
Thank you. Bye-bye.
Bye-bye.